So we're just going to wait for a couple of people to come into the webinar. We've just opened it up so I can see a bunch of people joining us now. So we'll just wait for probably not even 30 seconds to a minute before we get the ball rolling, just so everyone can get into the webinar. Perfect. All right. All right, we might get the ball rolling for everybody who is here on time. So today we've got myself, Lucy, and Jay from OBrien Real Estate, and we have Jade from TDA. We're going to be discussing tax depreciations and how to get the very best out of your investment this afternoon. We've got about a 20-minute presentation to do with everybody, and then we'll have some questions and answers at the end. You will see on all of your screens, you've got a chat box there as well as a question and answers section. We've got that open on another screen. So you'll see my name up there with a blank screen. So we've got the questions and answers, all the questions open there. So if you do have anything, pop it in there. We will ask Jade at the end. But we can't wait to hear about tax depreciation and what we can get out of our investment.
Yes, thanks, Jade.
Perfect. No worries, guys. Thanks for having me. Yeah, I've got a bit of a presentation to go through. So without holding anything up, I will share the screen with this one. Pop that one up there. Yeah, so from TDA Tax Depreciation Australia. So we are quantity surveyors looking after all your depreciation needs. Basically, a bit of an agenda for today is what is tax depreciation, exactly what it is, the services that we offer at TDA, the different divisions in tax depreciation, a scrapping report, valuations, and a bit more about TDA, our services, and why you should get a report. Why you guys need a depreciation report. What is a depreciation report? So it outlines the natural wear and tear of the income producing property over time, over a maximum of a 40-year period. So it's a non-cash deduction that reduces the amount of tax that you pay every year. We are a fully Australia-wide service, so we service every state, every territory, and every kind of property. So all of your residential properties, units, townhouses, houses, everything commercial. So that goes as warehouses, offices, farms, childcare centres, medical centres, commercial, retail, pubs, clubs, hotels, motels, short-term, and special purpose. Special purpose can be a range of different things, office fit outs, small rooms within big buildings. It can really, special purpose can be anything that's income producing essentially. But yeah, servicing all of the types of properties. And if you're unsure, always ask. Division 40 is all of the capital allowance. So this is the building structure. This is everything from your walls, your floors, your roof. The simplest way to put this is that if you shook the property upside down and it doesn't fall out, it's claimed under the capital allowance. So essentially anything that's fixed to that property, and these is claimed over either a 25 or a 40-year period. So you can see on the little graph there that residential properties as well as offices, warehouses and other commercial, these all depreciate at 2.5% each year over a 40-year period. Now this begins from the completion of construction. So unlike the manufacturing, warehouses, hotels, motels and guest houses, these all depreciate at more of like 4%. So these depreciate over a 25-year period, just due to like the amount of wear and tear these kind of properties get. Hotels, motels, and guest houses have hundreds of people in and out of them every day, and obviously depreciate pretty much twice as fast as a typical residential. A big one for this, big one for investment property owners especially, renovations qualify under this. So if you guys undergo big structural renovations on your investment property, even you replace the kitchen, you replace the bathroom, these things all fall into the capital allowance and can be depreciated over that 25 or 40-year period. Division 40 is all of the plant and equipment items. So all of your ovens, carpets, lighting, air conditioning, hot water systems, they're depreciated over a much shorter period of time, so generally between the 5 to 15 years. And these assets are only claimable for first-hand owners. So if you're an owner that has purchased it from a developer, an owner that's built the property, or you've otherwise installed these items yourself. So you've purchased the property and you've gone and added aircon, you've replaced the carpets and replaced the lighting. These items are all claimable, even though it's a second-hand property. Um, these items also have scrapping potential. I'll go into scrapping in the next slide, but just keep that little one in mind. So essentially what the scrapping report is, this is when a asset is either removed or disposed from a property. So essentially you're doing an entire kitchen renovation on your investment property. If that had depreciation left on it, you can claim all of that at 100% before you go and renovate. This goes for much larger scale renovations and knockdowns as well. So if you decide to renovate the entire property or knock down the entire property and rebuild it / renovate it, everything that was left worth of depreciation can be claimed at 100%. The biggest one with this is that it obviously does have to be an investment prior to knockdown or renovation and an investment post. Now, valuations. This is the process of determining the current market value of a property. Now, they're used for many, many, many different reasons, but essentially here at TDA, we are just doing them for the taxation purposes. So this is 3 different types of valuations. Capital gains tax purpose valuations. So this is a big one for when you have moved the property from a principal place of residence to an investment property. Self-managed super fund compliance valuations for any of you that own investment properties in your self-managed super fund. These are now either an annual or a 3-yearly compliance valuation that you need done in order to stay compliant with the ATO. So we do produce these. We also do the stamp duty valuations when changing from entity to entity. So for example, you've changed it from your personal name into a company name or a trust name. This is where one of these valuations comes into play as well. Stamp duty are going to be a really big needed valuation for the new proposed budget changes as well. So definitely, yeah, keep in mind that in the next financial year, one of these valuations is definitely going to be necessary for investment property owners. What is the cost? So our residential tax depreciation reports begin from 450 plus GST, and commercial properties more on a case by case basis, just purely because they obviously do range very large in size. So commercial properties can go from little offices to massive agricultural properties. So yeah, very, very varied in size on those ones. But essentially included in the report is the full 40-year report. So scheduled claims for every single year of the lifetime of the property, site inspections by one of our in-house team, including myself. If you live in Noosa or somewhere exciting, yep, definitely get in touch. Otherwise, I'll pass it on to one of my other team. As well as a double our fee guarantee. So essentially, if we can't double what we're charging you guys for the report in the first full financial year's worth of claim, then we won't proceed with it, and you either won't be charged or it will be refunded. The fee itself is its own cash deduction. It's 100% tax deductible, and the report can be backdated up to 2 years worth of missed deductions. So for anyone that's had an investment property but hasn't thought about a depreciation report, hasn't looked into it, you can amend to up to 2 tax returns with deductions. Why partner with us? We have a very simple and seamless process. We manage everything end to end. We look after it, get all the documentation, complete those site inspections. It positions you in a really good position in the market. It increases cash flow. It's an opportunity that a lot of investment property owners miss. We are fully compliant specialist led. My 2 directors who've begun this business have been quantity surveyors for older than I've been alive. So they know this business inside and outside, and yeah, are very across everything. It adds immediate tangible value. Essentially, you're getting money back right the second that you get this report. You're essentially claiming right from that get-go. And it works across everything, both residential, commercial, any type of property. Like I said, if it's income producing, you can depreciate it, which is really exciting. There's a few frequently asked questions here, which we very commonly get both from investment property owners and even people in the industry. Depreciation is a little bit of an unknown subject that we're trying to spread around for you guys. So, in regard to, are we a registered quantity surveyor? So, all of the team that do our reports for us, they all are registered and qualified quantity surveyors. Like I said in that last slide, you can back claim up to 2 years. Now, that's what the ATO allows you to do. Unfortunately, we don't just cut it at 2 years. That is just what the ATO allows for you to amend up to two tax returns. Doesn't matter how old the property is. Going back to those Division 40 and 43, when the property is renovated, this can all fall under Division 40 or 43 and adds up quite a chunk of money slash lifetime onto that property. So definitely worth inquiring on those older properties that you've purchased and have had renovations before you. We can see all that information. Our quantity surveyors, it's their job to look at that and find that and estimate that. So definitely worth looking into older properties, at least getting an estimate, a quote. It's always worth the time just to reach out. Is the schedule worthwhile for brand new properties? This is an absolute no-brainer. Coming up on one of the other slides, there is some real case studies as well. So you'll see that in real time. Tax depreciation we went through. So it's the natural wear and tear of your property, a non-cash deduction, which is massive. You're not spending any money to be claiming that back at tax time. Like I said, the only money you are spending for this report, 100% tax deductible. It's its own cash deduction. An accountant can actually not do what we do. So we are specialists in this area, and quantity surveyors are the only one that can produce this report for the ATO. If your accountant says they're doing this for you, it's likely that they're doing something different and not actually a depreciation report. And you do not need a schedule every single year. So this schedule, like I said, lasts you for the entire lifetime of the property. Scheduled claims each and every year until the life of the property is all run out. Like I said, some real life case studies on this one. So, yeah, some real life examples. Residential house brought in over $28,000 worth of claim in the first full financial year, and a total of $800,000. Residential unit over $18,000 worth of claim, and a total of over $531,000. While I'm on the residential unit, though, we'll really quickly mention that these are a massive one. A lot of the common property in residential units can be claimed. So all of your halls, pools, tennis courts, whatever it is in your unit, even if it's not a fancy one, you've just got hallways and a car park. This is all depreciable. Even if you're second-hand owner, you can claim the structure still on that. You still own a portion of it. So massive claim come from these units. Childcare centre brought in almost 100K, warehouse over 100K, massive amounts of deduction investment property. So definitely worth always reaching out and checking. Now I've got time for questions. Anyone with any big questions?
We have had a couple come through.
Perfect.
So we'll just go through these. Someone would like to know, is it still worth getting a depreciation schedule on an older property? Like what is the age, I guess, limit of an investment that someone can actually claim back to?
Absolutely. So there is no age limit really. Like, yes, the ATO lets you claim a 40-year period on your investment property. But like I said, there's a lot of the time there's been renovations, even if it's, they've replaced the gyprock on the roof and the floor at some point, adds depreciation to it. So I would say there's not any age where I wouldn't at least inquire. I would always inquire no matter how old you think that property is, because we have a double our fee guarantee. If we're not going to get you back at least double what you're paying for the report, then we're not going to go ahead with it. Alongside that, we have a free estimate. So you can always ask, what am I going to get back in that first year? Hey, it's only going to be $1,000. All right, I'm not going to go ahead with it. That's okay. $1,000 is still a lot of claim when you look at a tax deduction. So I would definitely say there's no age of a property that I wouldn't at least inquire.
Yeah,
Perfect. Thanks, Jade. Well, I suppose that kind of leads into the second question is kind of, I know it's a 40-year schedule, but kind of how often would you recommend getting an updated schedule if you're a bit unsure?
Yeah, of course. So essentially, once you have your schedule and you lodge that with the ATO, you can't then go and just get a new one. So it's once lodged and that's it. The only time you can then replace that is if you've done that renovation or you've changed things on the property. So the schedule is an updated schedule for a purpose. You can't just say, hey, I didn't like that one. Next year I'm going to go and get a different one. Once it's lodged with the ATO, that's final, until obviously there have been significant changes made to the property in order to justify supplying a new depreciation report.
And sorry, with that, would you guys need to then go back and check the new fittings and things that have been updated, or invoices or photos?
Yeah, so essentially, in regard to renovations, it does depend. So for older properties, we will generally always be able to do them fully remotely for the client. For investment property owners with photos, and then we gather invoices and information about those renovations, because essentially visiting the property and seeing them in person, does us really no good. We don't know when they were installed or how much it cost you, the client. So for investment property owners, we would always get your invoices, information, dates, and cost pricing. That's the best way that we can maximize those into a report. So a big one for that one as well, in saying that, always keep renovation information, invoices, everything. It's massive. It does really help at tax time.
Yeah, I suppose that's where you rely on your property managers, that documented info for you. Well,
Definitely. We've had another question come through. I'm not too sure whether this is about the scrapping or just about the tax depreciation, but properties that are changed from owner occupied to investment properties. Obviously, they can start claiming tax depreciation as soon as it turns to investment, but can you go through a little bit of that if someone's currently living in the house and they're changing it to an investment?
Absolutely, yeah, of course. So, um, on the depreciation side of things, yeah, definitely look at getting a depreciation report done. I would inquire and have it all set up ready for that when that tenant moves in, especially because if it is a property where we're going to need to do an on-site inspection for any type of reason, it's always best to try and get that done before the tenant moves in. You don't want to be disturbing that tenant in the first week. So always best to, yeah, at least reach out when you're in the process. I know it's a busy time, you're moving house, you're looking for a tenant, but I would say that's the best time to look into it, as well as the capital gains tax purpose valuation that we spoke about. So that's needed for when you sell the property, not necessarily when you're changing it over, but a good one to get at the time so you have it on file, because they can get very, very expensive when you're having to backdate them. So being ahead of the game and getting that valuation when you're changing it over, is a big one as well.
Just quickly on that one. So, obviously, a lot of investors just get a sales agent to do that valuation. Why is it important to have someone like TDA to actually do it as a certified valuation rather than just having your sales agent do it?
100%, yeah. So our valuers are both quantity surveyors and valuers. So they go and estimate the value and the cost of that property. And it's more unlikely to get audited by the ATO at that time. I would say is the biggest reason that people go and get one, like pay for evaluation and get it done by a qualified valuer, is for the ATO compliancy reason.
Yeah.
okay. And obviously talking, you mentioned obviously change over hands from current owners or old owners to current owners. Can renovations completed by previous owners still be claimed by the current investor? Like, how does that process kind of work?
Yeah, certainly. So, in some cases, yeah. So, in cases where it's structural renovations. So, a bit of an example, I guess, if you've undergone a full structural renovation, they've changed everything, the ovens, everything mechanical, as well as everything structural. Unfortunately, when they then resell it, all of the plant equipment items, the ovens, carpets, air cons, it's no longer claimable by the new owner, but
Mhm.
all of the structural aspects still are. So all the fixed bits, the bits that don't fall out when you're shaking it upside down.
Mhm.
And we can see that kind of history in photos and information. We have a system on our computer that tells us the history of that property. So we can go and see structural renovations, and it's definitely claimable by the new owner.
Brilliant. Is this also something that people with investments in Western Australia can claim and do, or is it just limited to Queensland, Vic, or specific states?
No, absolutely. So it is Australia wide. It's definitely more of an accounting question, as in regard to your more local tax kind of laws and things like that, what you guys can do. But I can 100% say with confidence that everybody in Australia can still claim depreciation on their property, even with the new projected budget changes. Everybody is still very much well off getting one of these reports, even with changes and things like that coming into place. With for us, it's pretty much business as usual, and we service everyone in Australia.
Beautiful. We've just got a couple more questions. Very quickly, you touched base on commercial property depreciation. How does, obviously, a commercial property depreciation, as you were explaining there, is so much higher than what you get on a residential. What's the difference? How does it differ so much?
Yeah, so essentially with your commercial properties, the capital loss doesn't apply. So with all of those, like I said, plant and equipment items, your mechanical and removable items, you no longer lose the depreciation on those when they're resold. So these actually carry over to every single owner. You're the second owner, you can't claim those. For commercial, everything can be claimed by any owner. So there's always a lot more claim on these ones. Um, yeah, roller doors, lighting, anything, it can always be claimed by no matter what owner you are. So even though secondhand owners, there's a lot more claim always.
Oh, that's great to know. Last one for you, Jade, is how quick does your team get out there? So obviously we've got a lot of investors out there probably going, tax time's coming up. So we obviously as property managers would like to be able to coordinate that. What's the process in kind of booking you guys and getting you guys out there?
Yeah, absolutely. So essentially, with the receipt of all information for the property, we can get the report out for you guys in 4 to 5 business days. In cases where a site inspection is necessary, this obviously depends on the availability of the property manager, the tenant, um, the site inspector. Our site inspectors are available 24/7, 7 days a week. So generally, it's always just working around that 10 a little bit, but we'd say they get booked within that first week, unless there's obviously any other issues. And then once that one's done, again, that 4 to 5 business days. In saying all of that, we do have an express fee as well when it comes closer to tax time. So I know a big one before that May 15 deadline, everyone was getting their report done right at that very last minute. So with an additional $90 plus GST on top of our fee, you can put an express on it. So even if the inspection's required, we ensure that's done the very next day, have the report out the day after, or no inspection required, it's done that day or the day after. So that's a big one as well, that if you've forgotten about it, you've gotten to the end of tax time, you're like, oh my God, I remember TDA. They said they can get this done quickly. Let me reach out to them. Always reach out, give us a call. We're happy to put that through as an express. Everyone gets a bit of a rush at the end of tax time. You're not the only ones.
Well, thank you so much for your time, Jade. You've
Thank
been
you guys.
very insightful.
Yes.
What Lucy and I will do, and I'm sure we'll have a few other property managers who are watching, is reach out to owners, see who does need to engage TDA, and hopefully we can get you some of the reports back to our owners and to yourselves, and go from there. I'm sure we'll have a few more questions as well. So if there are any other questions, if you don't mind, we'll flick them through and then get them back out to our owners.
Yep, and we'll send a copy
Absolutely.
of these to everybody who's registered and to all of our clients in the next couple of days as well. So if you've got any questions or if you think of anything afterwards, please feel free to reach out to us and we're more than happy to have those answered for you.
Amazing.
Absolutely. Perfect. Thank you guys so much for having me. And yeah, hope everyone has a lovely night.
Thanks for joining.
Thanks.
Bye.
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 Bye.